For probably many people, when you hear somebody saying that they're cutting rates to 0%, you're like, I need to refinance. I need to go buy a house right now. And kind of that was their goal. Hey guys, Tyler here, the real estate guy here in Omaha, Nebraska, helping you make better real estate decisions now and in the future. And today we're going to be talking about the Fed's big announcement with dropping the interest rates down to 0%. What does that really mean for you and for me? What does it mean about buying a home? Does it mean interest rates are really going to be dropping? My goal is to kind of clear the muck and give a clear perspective of really what's happening right now so that you can make a better real estate decision for you and your family. So without further ado, let's get into the video. So just the other day, the Feds just announced that they're cutting the rates down to 0%. And for probably many people, when you hear somebody saying that they're cutting rates to 0%, you're like, I need to refinance. I need to go buy a house right now. And kind of that was their goal in doing this. However, really, when they were cutting the interest rates to 0%, it actually doesn't really affect your interest rate for a mortgage loan that much. The way I understood it is what the Feds were doing was cutting their interest rates on the rate that they charged the banks when they do lending between each other. Their goal in this was to encourage consumers to not keep their money in the banks, but actually spend it. Because when your money is sitting in the bank, because of them dropping the rate, it actually starts hurting you because inflation is going up, your money is losing value. So their goal was to basically cause you to use your money and spend it. Now, this isn't the first time that this actually has happened. Back in 2008, interest rates in regards to what the Feds did were hanging around just a quarter above 0%. And they stayed that way for several years. So this isn't the first time that this has ever happened. And we can attest to that interest rates weren't at 0% back in 2008. They did drop. And even today, we have seen a huge decrease in interest rates, but really they've been going up and down. I've talked to a few lenders here in the past couple days, and they said there's no consistency in the rates. It's up and down. It's all over. It's minute by minute that they're tracking interest rates. And it has more to do with the fear of what's going to happen than it has to do with them cutting the interest rates. So since this big announcement, I've had a flood of people reach out to me saying, should I refinance? Should I buy? Is this a good time to buy? Is this a good time to refinance? And the short answer is, it depends. If you are in a position where your interest rate is above 4%, I would encourage you to talk to a local lender to find out what interest rates are today. Interest rates are changing on a daily basis right now. However, they are lower. What's crazy though is they were lower before the Feds cut the interest rate to 0%. And after they cut them, for whatever reason, they did increase. Now, if you look at historically back in 2008, the Fed interest rate was closer to 5%. So when they actually cut the interest rate from 5% to 0 or just above 0, it had a much bigger effect because that's really the only thing that the Feds can do to try to stimulate the market is to cut interest rates. Well, right now, interest rates before they cut this weren't that high. So when they did cut it to 0, it actually didn't make that much of an effect on the market. And as a result, we didn't see much change. We saw stocks continue to decline. We saw the fear interest rates continue to go up and just be erratic in nature. So when we talk about refinancing, the question shouldn't be, should I refinance now because of what the Feds are doing? You should be looking at refinancing now if it makes financial sense for you and your family. If you can get a lower payment and you're paying lower interest over the course of 30 years, by all means, this is extremely important that you be fiscally responsible with your finances. And if you can do that with a lower interest rate, you need to check it out, period. The second most common question I'm getting right now is, should I be buying right now? In light of where interest rates are at, in light of everything that's going on, I've had the question is, should I hold off temporarily? If you're in a position where you're just thinking about wanting to buy compared to I need to buy a home because I have a family, I need them to be in a home, I can't live with family members, so I need a place to live, and you just don't want to flush your money down the toilet by renting. If you haven't seen my video, you can check out this video right here where I talk about the pros and cons of renting and buying a home if you want more information on that. But with that being said, buying a home, in my opinion, is the way to go. And if you're in a position where you need to buy a home, I would not be too concerned about what's happening in the market right now for a few reasons. I see that home values, for the most part, are not going to decrease that much. I can only say that in regards to the Midwest because that's where I'm located. I will tell you that lower priced homes tend to not dip as much as higher priced homes. If it's higher in price, well, less people can actually afford that compared to a lower price range. So when you talk about lower and higher, what I'm referring to is need and desire. Everybody needs a place to live. People want a swimming pool. People want that second sink in the bathroom, in the hall bath, those types of things. So when we talk about looking at a home, the needs of a house are still needs, and people need to have a place to live. And those types of homes are gonna hold their home values better than homes that are more luxury, more, want-based. I just did a video a few days ago, and I'll link that right here, where I talk about where I see the market going, how it's actually going to be changing as we continue to move forward. And I continue to stand by that. What I would expect for you, if you are a buyer or wanting to buy, you need to make sure that number one, you're in a financial position, you have a steady job. And number two, when you're looking to buy a home, that you're buying a home that has a fixed mortgage rate that is affordable, that you're comfortable with. Because here's what's going to happen. If the market does adjust, what will happen to your payment? Well, the payment will stay the same. The difference between now and if something happened with an adjustment in the market compared to 2008 is that majority of the loans back in 2008 were adjustable rate mortgages, meaning that the interest rate increased and so did the people's payments when nobody could afford it. So therefore, a lot of people went into foreclosure, went into short sales. Well, that isn't necessarily the case today. Today, a majority of the loans, a far majority, are fixed rate mortgages, meaning that whatever you determine your interest rate to be or your payment to be today will stay the same through any adjustments in the market. Now, the only thing that will change is maybe your tax or your property tax payments that you'll be paying. Those may change every year, but those are a fraction amount compared to an increasing interest rate that you see over the course of an adjustable rate mortgage. Here's a couple benefits that you can look at when you talk about buying a home with what is happening in the market right now. Well, first off and foremost, there's going to be less competition. Just because of the nature of uncertainty, people tend to be more reserved, which presents an opportunity for potential buyers. There are always going to be sellers that have to move, period. Somebody is always going to have to move. And if there are less buyers, that gives you as a buyer an opportunity not to compete against another buyer and maybe get a better deal than you would if we weren't going through this economic shift right now with what's happening in the market. So that is definitely a benefit for looking now. Now, there's also the other side of it, the risk. There's always a risk, and the uncertainty of what may happen causes people to hold back. So if you are somebody that has stable income, that knows what they can afford, then I would say by all means, this would be a great time for you to pursue. Stay safe, be smart, do the proper guidelines that are recommended by the CDC, and continue to move forward. If you are not in a position where you're uncertain about your job, then obviously I don't need to tell you that you should probably just wait and see what happens. Put yourself in a better financial position, save money, position yourself to respond if needed, and you'll be better off than just taking a risk and spending money that is unnecessary. Okay, so just to recap here, with the feds dropping their interest rate to 0%, no, it is not going to drastically affect interest rates. We may see a decline over time, but it is actually affecting the interest rate the feds are giving to the banks, not from the banks to you. When it comes to refinancing, yes, refinance if it makes financial and fiscal sense to do so if you have a higher interest rate compared to where they are today. When you're going to talk to banks, make sure you're talking to banks and looking for these three things. 1, what is their interest rate? 2, what are their fees? And then 3, what is their customer service? Those are the only 3 things that I look for in a bank when I'm talking to them. And then lastly, is this a good time to buy? I would say yes and no. Yes, if you're in a financial strong position and you need a home, I would move forward because there's going to be some opportunities in the market with less buyers looking. If you're not, and you want to make sure that you're in a better financial spot in the future, then I would hold strong where you're at unless you have a high mortgage payment or a high rent payment. Then you may want to look to liquidate some of your assets to put yourself in a better financial position. But if you're able, hold on tight. We will get through this. This will blow over, and I'm confident that by the end, the market will come back strong, maybe even stronger than where it was before. So guys, I hope this was helpful. Thanks for tuning in with me. If you have any questions or are looking to do anything in the Omaha metro area or anywhere, please text, call, email, comment below. I would love to chat with you and hear your story. Like this video, subscribe, all that fun jazz, guys. Have a blessed day. We'll talk soon.